The short-term uptrend for stocks has resumed. We will look at the 4-hour charts to show that uptrend. High-yield bonds, utilities, and semiconductors all hit all-time highs. This is very good news, and I'll explain why specifically high-yield bonds and utilities are the good news. However, a pullback is quite likely as market breadth is currently somewhat overbought, or actually pretty significantly overbought. Again, I'll show you what that means. Gold moved higher as dollar slipped, but not much. So the danger for gold still remains unless dollar weakens significantly. And we can also see oil weaken to around $80 if my chart reading proves correct. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, April 10th, 2025. Thank you very much for giving all the likes, all the comments, and the shares that you've been doing. Thank you again. I've been trying to answer all the questions. Please keep those coming. Even a thumbs up or some sort of any kind of message in the comment section actually makes a big difference in the way the video is presented to others. So thank you again. Keep those coming. If you're a subscriber, stay tuned. The members only video is going to be relatively short because there's just not a lot of clarity right now, but we will cover some of the ETFs, some of the large cap stocks, and some of the speculative securities, so stay tuned for that. Throughout the presentation, I'll be using my proprietary MasterChartsTrading.com price action indicators, which you can see on this chart, this green, blue, red, and yellow lines. They are available for this interface, TradingView.com. You need to sign up for free at TradingView.com, then come back to my site, Master Charts Trading, sign up, and I'll open the door for you on TradingView.com. Okay, let's look first at S&P 500. So, as you have heard, the world stepped back from the brink. We could have had truly an epic crisis on our hands. Some commentators I've been listening to actually compared this crisis to a small nuclear war, possibly worse than a small nuclear war because of the amount of disruption that is that was going to be caused worldwide, but especially in places like Africa and Southeast Asia, and Asia like Bangladesh and India, etc. So the world stepped from the brink. I was literally losing sleep over it, but now we seem to be at least not in a danger of complete collapse. I'm sure there's plenty of things to iron out, but for now, at least, we're seeing that it's not as bad as some of the people were predicting, including myself. I thought we were going to have something very, very bad, especially if the escalation continued. Wall Street Journal is full of various articles of why things unfolded the way they are. Both United States and Iran are claiming victory. Well, but for our purposes, I think we need to basically concentrate on the charts. So let's first look at the 4-hour chart. And the 4-hour chart tells an interesting story. So up to very recently, notice this downward facing arrow. So again, this is a 4-hour chart. So remember that each candlestick is 4 hours worth of activity. So when you're trading on the intraday chart, meaning less than 1 day, each candlestick is less than 1 day, you need to use what's called a continuous security. So in this case, I'm using a contract for difference, CFD, but you can also use futures. It looks exactly the same. So let me get it. Excuse me. There. Okay, so on this chart, what we're seeing is, first of all, we bottomed out around 30th of March. made a rally towards this red support resistance line, and basically at this point we're still technically in a short-term downtrend, short-term because it's a 4-hour chart, and this downward facing arrows would have been the places you wanted to sell them, to sell this chart or sell it short. But notice that we kind of broke above this line on 5th of April here, and then we several times we tried to get below it, like you can see on April 6th, April 7th here. We tried to get below it, but we were rejected. So this type of rejection means that there is support. And notice that basically the red line proved to be a support for this price level. And then we surged over 2 candlesticks, so 1 trading session, came up above the blue line. So basically at this point we are now in the uptrend on April 7th here, and then we kind of retested this line and then rallied yet again. So we moved about 4% in about 2 days, so definitely a strong move. Now why do I say that market breadth is somewhat overbought? So let's look at that market breadth, and this is what's called a advanced decline line, or in this case it's a 10-day exponential moving average of the advanced decline line. So we have daily stocks that advanced, went up, when we had daily stocks that declined, went down, and we take advances and subtract from them the declines, get a number, and then we average that over 10 days. So we get this squiggly line. So basically it's an oscillator with a 0 line in the middle. We were pretty strongly oversold starting around mid-March, and we continued lower. We got pretty oversold, but then we finally surged, and we're now actually pretty strongly overbought in the overbought territory. So what does that mean? It means that there is a good chance that we will at least pull back a little bit. So that's the reason. Okay, so first of all, we have this gap here. We can see that between the 7th and 8th of March, there's a sizable gap that needs to be filled. So a pullback to fill this gap at the very least is quite likely, but I think we might actually get a deeper pullback. So what I'm doing right now, what I'm showing you right now, is a projection of my indicators into the future. I already projected this last week as well. The reason why I wanted to show it is because of the way we're seeing this narrowing of a trading range. So very recently, the distance between this yellow and green lines was very, very large. It was almost 1,500 points, or 27%. But notice what happened now. Notice that we're narrowing. So the green line and the yellow line are coming closer and closer together. So even right now, we're already only 1,200 points, or 23% apart. And notice that what's happening in the near term is that these lines are collapsing closer and closer together. And even very, very shortly, we will have a trading range that is over half of what it used to be. Actually, exactly half. It used to be like 1,500. Now it's going to be around 700. So this implies that the price could go down and retest these levels, and it will take it, and for the price to do that, it will take much less effort than it was just actually literally like today or a few days ago. You see how much power needs to go for how much energy it needs to go down. It used to be 27% away. The bear market used to be 27% away from price action. Technically speaking, right now, bear market is not even that far away. It's about, okay, well, let's just say we start, we trade sideways or slightly down, and we just basically keep trading sideways or slightly down into, mid-June. And that implies that we could easily make a new low and in fact enter a new bear market, because it's just not, the distance to the bear market levels are just not that far, and the bear market is a yellow line basically. So if we close below the yellow line, it would imply that we're now in a bear market, and we want to be thinking about selling this stock. Right now we're still in an uptrend. So what's my kind of like prognosis for the next few weeks? I think the market breadth is overextended in the to the upside, so it's very likely that we will at least close this gap here between 7th and 8th of March at the very least. But more likely, we might get actually a deeper pullback and might, at the very least, retest this blue support resistance line, which is not that far off. So even if we just trade sideways, we could easily retest it in late April, early May. And if we continue like sideways to lower, then we could actually get into a bear market. So all of this are quite possible. They're all real possibilities, basically. So that's the kind of bearish picture, I guess. So what can we also say about this current situation, but from a bullish perspective? So a very, very good news, I think, is this security, JNK, high yield bonds. It actually hit records right there on the 8th of April following the announcement of the ceasefire. So when, we can also look at the longer term chart of high yield bonds, and I will show you the correlation between high yield bonds and S&P 500. So this down here is what's called a correlation coefficient. And notice that it is very positive. So in other words, when high yield bonds, JNK, move up, stocks also move up. When high yield bonds move down, stocks also move down. So this is what we're seeing. We're seeing actually a record high by high yield bonds before stocks went to records. So to me, this is what's called a bullish divergence. And it is a very good sign, I think. So we will be on the lookout for fresh records for S&P 500 unless something of the nature that I just described with a pullback unfolds. Another good news is a record high today from the semiconductors. So SMH, ticker symbol SMH, just hit an all-time high. So this is as economically sensitive, as risky as it gets. Semiconductors are quite risky stocks, and they're what's called offensive sector. So if it's doing this well, if it's just hitting records, and we're seeing, war in the Middle East, or at least it's coming to an end, then there is still appetite for risk, and we want to be seeing appetite for risk if we think that stock market will go up. So this is actually very good news. Another piece of very good news is record highs from utilities. This is XLU utilities. Record highs were just hit yesterday on April 9th. So why do I care about utilities? Because utilities in general use a lot of money that they borrow. And so indirectly, this could imply the higher highs and higher lows for utilities. This could imply that the interest rates will continue down. So interest rates, 10-year Treasury note yield did spike, but if I'm reading, the charts correctly, utilities going to new records would mean that utility investors are anticipating lower interest rates. Lower interest rates imply higher prices for bonds. So in this case, TNX, the interest note yield, 10-year interest note, Treasury note yield is going sort of down right now. It's trading more or less sideways, but I would think that down would be a more better direction, so to speak. And the utilities, once again, if they hit records, then I think it's a very good sign. So several, positives, several negatives, as I just described. Some of them are, more likely than not to happen. But let me know what you guys think in the comments. Make a comment. One more thing I wanted to mention: EWZ. This is Brazil. Brazil just hit an all-time high as well, so Brazil seems to be pretty much immune from recent activity in the Middle East, rightfully so, because they're so far away. So another good news is that Brazil hit all-time highs as well. Let us switch gears. We're currently looking at euro versus US dollar, so we're going to look at some of the Forex action. So last week I mentioned that euro was attempting to collapse. You notice how we touched this red support resistance line right there on the 30th of March and on 31st of March, but we failed to break through. So euro actually did not, technically speaking, enter a downtrend yet. And in fact, today we saw a breakout by euro. So euro is now back into an uptrend, and I would be buying it right this instant. The dollar index, currency index, is about 50% euro. So it makes sense that right now dollar index is under pressure. Notice that here's the 30th of March, and then we basically dropped. And actually there was a gap here between 7th and 8th of March, and we kind of moved lower. So this gap still needs to be filled, and if it does get filled, then gold will come under pressure. Why? So dollar moving up, meaning dollar is becoming bigger. So let's look at gold. XAU divided by USD. If this bottom part of this equation will become bigger in the near term, it will pull this currency pair lower. So still not a very decisive chart for gold. Technically speaking, we're seeing buy signals where these up arrows are, but I am very reluctant to trade gold on the upside until dollar is back in the bear market. So dollar needs to drop below this red support resistance line, which is not that far away. It's like less than 1%. So even if euro strengthens a little bit next week, I think dollar could easily drop into a new bear market. So if that happens, I think I would be much more comfortable trading gold on the upside. Same goes for GDX, gold miners. So again, this is technically speaking a buy signal that occurred on 31st of March. And so if you have my indicators, you could have gotten in and traded it. And let's wrap up with oil. So oil is obviously extremely volatile. If you got in back in March, on March 2nd here, you probably made some good money. I would consider getting out at this point, honestly. Just based on this action, it's not a great looking action if you're a bull. So first of all, this just giant red candle, it's obviously very big and very red. We're kind of trying to bottom here around the blue line, but so far these candles don't look very strong. So I have a suspicion that this entire candlestick at the very least need to be duplicated on the downside, and this is where I'm getting that $79-80 area for oil, provided obviously we won't have another flare of the war in the Middle East. So hopefully this will be the end of it, and we can move on to a new world order. All right, let me know what you guys think. Don't forget to make a comment in the comment section on YouTube. Let me know what you guys think. Put a thumbs up. Then head over to MasterChartsTrading.com. Click on sign up. So sign up for one of the products. If you want my trading indicators again, these trading indicators, these green, blue, red, and yellow lines are available for TradingView.com. TradingView.com is a free interface. All you need to do is open a free account on TradingView.com, then come back to my site, MasterChartsTrading.com, and sign up for the indicators, and I will open the door for you on TradingView. The newsletter is the daily and weekly newsletter that I send out, and daily alerts and weekly members only videos that is going to be covered this week, all of the stocks. And of course, the best deal is to get both trading indicators and newsletters. And the best deal out of the 2 subscription options I have, monthly or yearly plans, is of course to get the yearly subscription, because you get 2 months free, which is 17% off of the equivalent price from the monthly subscription. That's it for this week's recap. Thank you again for watching. Have another great trading week. Bye-bye.